I think we're going to see a digital employee in the future. And
Oh,
this digital employee is going to be above and beyond an actual workflow. Like, I'll give you an example. Let's take the leasing agent. So right now we have a lot of leasing and some of these things, and they can answer telephone calls. And there are products like 11 Labs and some of those that do great with the voices and stuff like that. Eventually, we're going to have a leasing agent that is digital, and her role will, or his or her, will be to call these individuals to actually nurture them all the way through from start to finish. And they should be able to, if I were to test them against a true leasing person, do everything digital that can be done compared to a human, and they should outperform the human.
quick favor before we jump in. It always surprised me that a large percentage of people who listen to this show regularly haven't yet subscribed. If you're a commercial real estate operator, investor, or builder who values conversations like this around deals, capital, and technology, please take 2 seconds and hit subscribe. It's a simple, free way to support the show. My commitment to you is that my team and I will continue bringing you higher level operators, stronger conversations, and real execution level insights every single week. Thank you. I truly appreciate it. Welcome back to the AI Edge podcast, where we sit down with investors and operators who are building real businesses and commercial real estate through strategy, systems, and disciplined execution. Today, we're talking about something every operator respects, lessons that you only get from the deal table, the wins, the misses, the scars, and the mindset that keeps you improving through cycles. My guest today is Ken Doble, apartment investor and operator and partner at Quantitative Realty Capital based in Atlanta, and started as an on-site manager in a 24-unit building, answering phones, fixing toilets, and collecting rent, and worked his way up through the accounting and finance and ultimately ran operations as COO, overseeing 23,000 units across 11 states. That company did not survive the 2008 crash, but Ken did, and used those lessons so he could co-found QRC with a sharper lens on what actually drives performance, not just what looks good in the pro forma. Over his career, Ken has been involved in more than 30,000 units, led over 233 million in renovations, and worked through hundreds of distressed property situations. He also wrote 5 Ps for property management, a practical framework for running better apartments through people, pricing, product, promotion, and process. Ken, welcome to the show.
Excited to be here. Thank you for having me.
Great to have you here, Ken. So let's start off with your path, because it's rare. You started on a site in the real trenches and moved all the way up through controller, CFO, and COO. When someone asks you today, Ken, what do you do? How do you explain that in plain English?
Well, I tell everybody that I basically look for distressed real estate, buy it, renovate it, and turn it around. I'm basically a flipper of large apartment complexes.
Fantastic. So what did you learn on site that people in corporate roles often miss completely?
There's so many lessons. I think the biggest one is the management gap. So in large organizations, and the bigger the organizations, you see this huge gap. There's these policies and procedures of what the corporation, what the people in the office thinks happening. And then you go to the actual site and then you see this difference. And in some cases, you can drive a Mack truck through the differences. And if you're not setting up the right systems, the right processes, you can definitely delude yourself thinking the team's doing something that it's not.
That's amazing, Ken. If you could go back and give the 24-unit version of Ken one piece of advice, what would that be?
Diversify and invest in an index fund.
Excellent. You describe your career journey in one word as curiosity. What does curiosity mean to you in the context of multifamily operations and investing?
I think you have to constantly be asking questions. You can never assume that you have all the answers. And this industry changes so much. And if you're not asking those questions, then you're going to realize, hey, wait a minute, something's not right here, and I don't understand why. I'll give you a great example of this. We had a property, this is several years ago, the regional, I was looking at the numbers, I said, why are we not leasing? And she said, Ken, I don't know. And I said, well, that's not good. We got to figure out why we're not leasing. So we went through a checklist. Do we have the right team at the property? Yes, we had a great team. Are we competitive in pricing? Yes. Are our ads running? Yes, we had all the ads going. So what was the deal? So I came out there and I started looking. I said, okay, let's start calling some of the people who toured and didn't lease. And we found out that across the street, they had just done a large renovation and they were doing a look and lease special 2 months free, but they were not disclosing it to anybody on the calls or any of the advertising. It was a hidden special and they were sucking all the traffic right out of the marketplace. So we see this type of stuff a lot. And now, of course, with the real page litigation, and you're not supposed to call your competitors, you can only see it on social media. So now we have the front door through the websites, but the back door, the look and lease is still a very powerful closing tool. And the only way to know is to call the customers who didn't buy from you, potential customers, or to actually send someone over and shop them. But of course, if they know who your team is, they're not going to tell them the truth.
How does curiosity show up in your process now? How do you evaluate properties? How do you evaluate people? And how do you make decisions?
Multiple questions in there. In terms of curiosity showing up in the day-to-day business processes, I would say this: AI is probably one of the biggest tools I use on a daily basis to help me learn and understand and think better. Now, I use ChatGPT, I have Claude, I have Gemini, I have GenSpark. I have a lot of different AI tools that I use for different things. I also am an N8N programmer and I do a lot of different things like that. But what I would tell you is that if you set up the proper custom ChatGPTs or custom projects or workflows, you can actually prompt yourself to think differently. So one of the things I have, I call it the lens of perception. What I've done is I've created a series of prompts that will take any issue, any business issue, and run it through an imaginary board of directors. And I have Steve Jobs on one side, I have Charlie Munger over here, I have Sam Walton, and I throw it at them and they come back and give me ideas. Now, sometimes they're stupid. Sometimes it's like, wow, I hadn't thought of that. So it really pushes you to think outside of something you didn't know. And it makes you curious because one of the things I ask is, what did I miss that I should have asked? And the AI is great at pointing out things that you didn't realize you should have learned. So I think the curiosity in terms of finding what I'm missing with the business process and things like that, definitely AI. In terms of curiosity for deals, well, unfortunately, what happens is the market changes constantly. You have to be incredibly disciplined in what type of deals you're looking for and what your return metrics are. And you have to know what you want because you can always move the metric. For example, if I tell you I'm looking for a 10% cash on cash yield, in this day and age, I'm probably not going to get a lot of deals. So then I say, well, I want a 5% cash on cash deal. Well, now I can get a lot of deals that make a 5% cash on cash deal. The question is, when you can get treasuries at 3.5, 3.7 or something like that, does it make financial sense for the risk in real estate to take that differential? So you have to figure out where your litmus test is. What's enough for you to move the needle? And for me, obviously, we're very disciplined. I think we looked at 182 deals this year, only about one deal. And not because right now there's negative leverage out there. So it's very hard for us to make deals work. We're not coupon clippers. I'm not looking for a 4 or 5% yield. I'm looking to make real cash on cash returns for my deals, or at least grow to it, or some sort of, I at least want to see a 15 plus IRR. And I have to be honest, I can't drop a cap rate on the exit and say, oh, I can get out at a 5.5 cap and I'm buying it at a 6 cap. It just doesn't work in my mind. Yeah.
What
Go
is
ahead.
your metric for cash on cash? What is your percentage?
Well, we usually look for around 7 to 8% in year 2 to 3, typically is what we're shooting for. And we have to build that off of realistic assumptions. And we use typically lower leverage than most. We're probably around 65, 70% leverage. I don't like using high leverage. So again, when you're talking about comparing deals, not all deal comparisons are the same, especially if someone's using higher leverage and layering on mezz or something like that, because the risk, even though the returns go up, the risk to losing the deal and having survived 2008, you are permanently, your behavior, I'm traumatized. The behavior has constantly changed from that point on. I'll never, ever put that kind of leverage, and I'll never, ever do deals like they were done back then.
What asset classes are you focused on?
Primarily A and B apartment complexes in the Southeast. So that's primarily Atlanta, Georgia, Tennessee. I've bought stuff in the past in Florida, but Florida is very difficult with the insurance and also the property taxes. It's very hard to make the numbers work in Florida, but there are great deals down in Florida right now. I'm seeing a lot of opportunities down there, but you also have to play that hurricane lottery.
Insurance is killer over there. You lived through 2008 in a real way, not just a story, but as a operating crisis. That company didn't survive the crash, but you did. What did 2008 teach you about leverage, incentives, and operational fragile.
Okay, so a couple of things that really changed how I behave. Number one is we use lower leverage, which I've already alluded to. Number two, we actually are big believers in having lots of reserves on deals. So I can't tell you how many performance I've seen from operators, and they don't realize that you need to have operating cash flow for your deals. AP is not pushing out AP 90 days is not the appropriate mechanism. Making sure you have 3 months of operating expenses at service coverage ratios in the reserves. Yes, it drags your return down, but trust me, when the inevitable problem comes up, you can be so thankful that you raised the extra cash, have that money sitting there for those types of emergencies. The next thing is when you're doing your renovation scopes, I have 3 line items of contingency. The first is your general contingency, which most people put at 5%. It depends. If you have really strong coverage on your bids, that means that you have a lot of bids and you know exactly what the scopes are going to be, then you can get away with 5%. But if you're at the beginning of it, you should have closer to 10%. And the reason is you don't really know what you don't know about the deal until you get into it. So that's one. Two, I actually have line item contingency, and that is on a particular line item. I'll give you an example of this, and this ties into both the other types of contingency. We actually had a Nashville property. It was an old hotel. It was in downtown Nashville, a beautiful building, and it was converted. It was 1920s construction. And I was looking, I said, we're going to replace these beat up bathroom cabinets and kitchen cabinets and stuff like that. And I said, okay, well, I'll put the money in for the connections and all that. I figured we'd just be able to sister in onto the existing plumbing structure. But I was nervous because we weren't, during the due diligence, we were able to open it up and really see what was behind the walls, because usually they won't allow you to do that type of testing when you're in a building. Well, thank goodness, because when I pulled it out, we tried to connect on the pipes crumbled. So we had to repipe entire sections of the plumbing. So that's an example of a line item contingency that I had because I knew there was this potential. So I increased it and I said, well, this could happen. And I increased it. And that's only from experience because I've dealt with older properties before. And then the next thing is scope contingency. So if you're looking at it and saying, okay, we're going to do decking and we're going to do tile decking on the pool. Well, I get in there, you know what? I could always go back and put cool decking and save $100,000. Well, I'll do the cool decking and save the money if I have to. So this is the kind of difference when you're going in and you're looking at that saying, how am I going to structure it? The other thing I would say is when you're doing your debt structure, make sure that you don't have a gun to your head with your capital stack. I see this a lot. People will put maturities and they'll have these loan covenants that are very onerous, and those things can really torpedo a deal and go back, especially when you start layering on mezz and other types of things. And you're basically doing the deal and your equity could potentially be wiped because you did a bad structure and you didn't give yourself enough runway and negotiate up front before the emergency hits that you need that extra time.
Amazing, Ken. What were some of the early warning signs in 2008 that most people ignored?
Well, I think in 2008, there was a long run. Things were going great. People were making so much money. We were in the condo business. We had $350 million of condos and we had sold all the condos. We had huge amounts of earnest money. And when 2008 hit, it hit like a nuclear bomb. Everybody walked from their contracts, and we got sued by everybody. And people were using laser levelers trying to figure out if the measurements were off by 1 centimeter. Oh, it's not the right measurement, therefore we're not going to close. And we thought we had this security, but we did not. All the contractors were scared. It was a complete mess. But prior to that, to answer your question, there were lots of signs. And I think the mania, we started seeing really ridiculous pricing, and we were selling into it, but we weren't selling into it aggressively enough. We went into 2008 at the time. I think we had $1.5 billion worth of real estate in aggregate. And when the dust settled, I think that the valuations were closer to $850 million. So the equity was white. Many of the lenders were white. It was an absolute disaster. So it's a lesson to you that you can grow very fast, very quickly. And if you don't have staying power, and we did not have staying power at that point because we did not have the proper cash reserves. We did not have the proper contingencies and the renovations and things like that. But these are hard lessons learned. And when you're growing really fast, you don't realize how much cash is consumed in working capital in the entire organization, from the management company all the way to the construction company. There's tremendous amounts of cash that's required to keep the system running. And when it happens, it's very painful. And what we're seeing right now is very interesting because we're seeing a lot of deals coming out. There's a wave of potential foreclosures, and I've actually seen several pools of notes that we've looked at that are coming through. The question is whether or not we'll get a panic. And I don't know the answer to that, nor does anybody else. But I do believe that we're seeing a lot more activity come out.
Amazing. That's excellent advice. You told me you've done a lot of deals and you had failures and home runs, right? Huge home runs, which they actually bought and taught you valuable lessons. I'd love to make this real for our audience. Can you share one home run that made it work that was actually a true operational, but not just financially?
Yeah. Okay. So I call this the Lotto principle. And for the listeners, this is really powerful. So there was a deal called Collier Ridge. It was a large deal in Buckhead. And this particular deal had the largest floor plans. I mean, almost 30, 40% larger than anybody else. Yet its rents were way lower than everybody else of similar age and vintage. And we were scratching our head saying, well, wait a minute. If we go in and renovate this, we just need to bring it to the market. If we just bring it to the market, the returns are insane. So we ended up doing like a $5.6 million renovation on the property. We were able to drive the rents close to $300 per unit on the deal. And the deal was a tremendous home run for everybody involved. That I call that if you can find a deal in the market somewhere where it's superior asset. In other words, it's got better floor plans. It's not functionally obsolete. It's not a 2-1 or something like that. It's compared to its comps. It's actually much lower. Then when you buy the deal, you don't need to just worry about the regular market pulling you up 2 or 3%. You have the ability to close that gap if you're able to execute operationally. And that's the value add we talk about. Yes, you can go in and do the bathrooms, we did all that work. Yes. But also there's just simply bridging the gap between where it should be, where it is. And a lot of that's reputational. It had a bad reputation. It had poor management and that type of thing. So bridging that gap and breaking. So there's 3 types of actual rent growth. And actually, I think I just wrote a LinkedIn post about this today. So we have the rent growth, that's the market. So the market's going up 2 or 3%. Well, if you buy the deal, you get that regardless. And by the way, that could be up or down. We don't know. And then we have lost old lease. And this is a point that a lot of people miss when they're doing their underwriting. I've seen lots of models with no lost old lease in them or gained old lease, which is even worse. But what ends up happening is if you have an equally distributed rent roll, you are not going to get that 6% rental increase in your performance. You stick it in there, you think that everybody on year 1 is going to go up 6%. Not going to happen. It's going to be 3%. And you have to make sure your lost old lease captured that. And even worse is when you see gained old lease, which is basically you're buying a falling knife. The rents are going to keep dropping as those leases roll over. And then, of course, we have what we talked about before. This is the property-specific value where you're driving the rents because you're doing a value add. You're simply managing it better. You're optimizing RUB reimbursements and things related to rent. So those components make that up, and I think it's a really powerful way. So in that particular deal there, I call it the Lotto. It's an incredible deal. You find it, and it's superior to the comps, but it has lower rents for operational reasons or deferred capital reasons. And you can go in and fix it, and you get the regular market rent growth, and you get to bring it to market, the mean reversion. And it is an incredible home run whenever you can find those. They're very rare.
Fantastic example. Now let's share a miss. Right. So what did you underestimate and what did you learn and what did you do? What would you do differently now because of it?
Okay, I think the biggest lesson for all the operators out there, and this happened in 2008, there was a property called Highland Falls. It was a very large property. It was, I think, 400 something units. And this particular property this is in Atlanta, and we had the tech in 2000 when it imploded and employment crashed, or I should say spiked. Well, what ended up happening is the occupancy dropped, the bad debt spiked, crime increased. And I had 7 regional managers. I had a lot of properties at the time. And this was a really problem property. So I went through 3 managers. I took my regional and said, temporarily, I'm making you the property manager. So this lady was a rock star, and I put her on the property. We gave away a car. We tried to do everything we could think of marketing wise to fill the property up. Us and everybody else were in the low 80s. And what the lesson I learned is that you cannot fix a bad market with operations. What you can do is make it less painful. And I learned those lessons because we had a similar situation happen to me in 2018. We bought a property, Auburn. It was a 756 bed student housing deal. And when we bought the property, the market was 98%. And they built thousands of units into the market. And the occupancies of all my comps went into low 80s. We were sitting at 95. Now, are you a great manager? No, we spent a fortune on marketing. I called it a knife fight. We had to do all this different stuff, and the numbers were lower, but we were able to outperform only because we out executed everybody else. But it was brutal, and that stuff happens. And it is possible, but there are some things that happen that you just can't fix with operations. And of course, you had to have the flexibility. In that deal, I had the flexibility to be able to cut the rents. On the other deal, because our debt service, we had so much leverage, we could not cut the rents like that. We were being forced to, which meant we couldn't make our debt service, which is a whole nother issue there. But I think that was a big lesson. I mean, there are many, many other lessons you can draw from your failures. Clearly, I always go back to the 5 Ps. Do you have the right people at the property? That's such a critical thing. Do you have the right training? You can have the right people, but if they're not trained properly, if they won't perform. Do you have the right incentives? I cannot tell you how many times in my career I've gone out to properties and they don't even know why they're getting the bonuses. So why even pay them? You have to make sure the team knows what the bonuses are for, why they're there. And the people that are super money motivated, I can give you a great example of this. I had a 500 unit deal in Texas and they were complaining about the upstairs units. They said, nobody wants to lease the upstairs unit. No one wants to walk up, Ken. We can't lease them. They were just complaining. And I said, okay, I'm here. I'm taking the regional and the manager to lunch, and we're going to go over financial review. We'll be gone for a couple of hours. Here's the deal. 3 times the leasing commission on any upstairs unit. 3 times. I said, yep, 3 times. And whoever has the most, there'll be another $500 bonus. They went nuts. I think we leased like 20 of them. And then I looked at him and I said, do you see now? It had nothing to do at all. It had to do with your perception and how you were portraying it, because you were doing the easy ones, the lower stairs ones, and not have, because they didn't want to walk up the stairs. But all of a sudden when it became, hey, you now get this extra money, bam. So the power of incentives. Next is pricing. And I think I've already alluded to earlier with the Highland Enclave property where we had a situation where the pricing was being hidden. You have to make sure your offer and your pricing is competitive with your comps. If you don't do that, you won't lease any units. And I've seen people, new construction deals, where they build these deals and they think they're going to be able to get these crazy rents. They put them out there and nobody shows up. So you have to be realistic with what you can do. So that goes into a whole pricing discussion. We could have a whole separate lecture just on pricing. Next is promotion. I thought I understood pricing. I mean, promotion. I'm sorry. Promotion is such a critical part of this, and making sure all your ads are there, making sure your Google AdWords are correct, making sure your copy is good, making sure your website is good, making sure your photographs are done by a professional photographer. All these little things, they mean a lot. They really do. Next is the product. You've got to have a beautiful looking property. No trash, no broken down stuff. I can't tell you how many times I've walked on properties. I've seen trash in the parking lot. I've seen weeds in the parking lot. I go to the model, there's cobwebs all around the hallway, all walking up to it. There's a dead bug inside the model. And you're like, really? And you wonder why no one wants to lease here? So the product is such a critical part of that. Next, the final catch-all is your process. I've seen examples of properties where, why aren't we moving people in? What's going on here? And they weren't finalizing the actual final button they had to click to move people in. So we had all these people just sitting and pending and like, what are you doing? And they didn't have all the paperwork. So they weren't getting the paper, so they couldn't go through the process to process them. So this is an example of a bad process. Another funny story. I went out to one of my property managers and I said, what's the stupidest thing we make you do? I mean, be honest with me. Tell me, I know we do something that really just drive you nuts. And she said, Ken, I'm here to tell you, these month-end reports we have to do, it takes 2 to 3 hours to do this. This is ridiculous. And I was like, really, what is it? Show me what you're doing. We have to print this out. We have to do this. This big binder. I said, really? Let me get that. So I went up to the corporate office and I walked over to the training department. I said, hey, why do we make them do this? And she said, we don't make them do it. Accounting does. So I walked over to accounting and I said, accounting, why do we make them do this? I said, we don't make them do it. Training does. So what had happened is we had transferred over from one software to another software. And in the transitional phase, that software was not being properly, you had to do it. But then afterwards, there was no reason not to. So that's why it happened.
Amazing. That's dropping gold there. That's fantastic. Thank you,
Yeah.
Ken. You've been obsessed with what works and ignoring what doesn't. So let's go there. All right. In your experience, what's the biggest levers that actually move NOI? And which levers do people talk about that really matter as much as they think they do?
Biggest levers that move NOI. Well, I think the number one thing that moves NOI, obviously, is you have a couple of them. Number one is rents. Can you get higher rents? But that's more of a function of where you're at in the marketplace. Can you actually drive the rents? Number two is occupancy, getting the occupancy where it needs to be. Number three would be bad debt, reducing the bad debt, optimizing the bad debt, making sure you're collecting every penny. Then I would dig into the other income. And I've seen this a lot. I'll do other income audits and I'll discover that they haven't actually done a pet audit, or they haven't actually gone through and looked at their comps and said, wait a minute. Like I'll give you an example. We recently bought a 576 bed student housing deal. The property across the street was charging $350 community fee. They were 98% and they were getting $350. This property was only getting 125. I was like, well, let's just get 350 to match them. Well, that's it's like $160,000 difference in income. And I was like, well, that's a no-brainer. So this is the low-hanging fruit to drive that top of. So that's 100% of the pie is increasing the revenue. The other one that's people need to do this. You're not going to believe this story. So we bought this property and I was looking at the RUPS and it was a simple bills. I said, okay. So we did the transfer over and I said, wait a minute. Why do we have vacant electric? I said, the kids are paying their own individual power bill. I don't understand how we have this vacant electric that we're paying for these units because these units are occupied. What's going on here? Well, the prior owner management company had set it up where the owner would eat all vacant bedrooms because we do everything by the bed. So what that meant was they were subsidizing the tune of $5,000 a month on electrical cost because they didn't have it set up correctly. They've been doing it for years. So don't assume, we talk about curiosity, don't assume that things are being done correctly. And you wouldn't know that unless you get into the weeds and start digging and saying, well, wait a minute, why are we doing that? Doesn't make any sense to me. They had us paying for vacant water. And I was like, what? Why am I paying for vacant water? It makes no sense to me at all. So these are the kind of questions you have to constantly, and this is curiosity. Like, why? What do you mean? I don't understand. And if you were to take any financial statement on any property and just start digging and start asking questions, you'd be amazed at how much money you can squeeze and increase your NOI by asking questions.
Amazing, Ken. What are some of the most common lies operators tell themselves when a property is underperforming?
Whew, most common lies. Well, I think that one thing that they can do is they can basically blame the property management company. So, and sometimes it's justified. Sometimes the property management company has dropped the ball and there's some issue, but sometimes the performer and the expectations were not set correctly to begin with. And we are talking about me collectively included. We're the easiest people to fool when we're doing it because when we're doing these performers, we're doing 5-year projections into the future as if we have some crystal ball. No one had this thing where the rents go up, go down like this. It's all like this, the hockey puck where we're just, oh, rents are just going to grow. Well, we know reality doesn't look like that. So a lot of times it's the expectations that we set up, and that we go back to having the cushion, the cash, and making sure that you have realistic expectations. And when you give to your investors, I like to give ranges of performance because it's not this exact band, like this is the number. No, nobody's ever hit a performance to the penny. It's always a range. There's high, expected, and low. And having the realistic range or distribution of what you think could happen would be one thing that you could definitely do to make a difference.
Ken, what are the first things that you look at when you walk into a distressed asset?
The team. I come back to the people. The number one thing I look at is the team. If you have the right people at the property, it makes all the difference. So I had a property in Ridgeland, Mississippi, and this is an interesting tale. So the lender had actually taken it back and gone through 3 management companies. And this lender knew of us, and they approached us and said, well, we don't do third-party management. And they said, well, we'll make you a partner in the deal if you come and fix this, because we've had 3 different management companies. We've had 2 construction companies. We have 1,700 work orders, code violations, 1,700 code violations. The city is threatening to shut it down. It's like 50-something% occupied. It's got, millions of dollars of renovations. It's got raw sewage. It's got a gang it's like everything you could think of.
No.
Well, obviously, we wanted to impress the lender because obviously it could be a potential good partner for ours. So we took it. And the first thing I did is went in there and I went through 3 different property managers till I finally found a great property manager. And then we built the rest of the team out. We set up huge incentives. We brought in construction people from Atlanta because we have a hard time finding contractors that were reliable in that particular location. And after we set up those clear principles, 5 Ps, right back to it. We went through and said, okay, now that we've got the product looking good, that was a huge part of it because it looked so bad. We had to spend a lot of money renovating it. And here's another example of curiosity. Okay. So one of the things that the prior management company had told them is that they had this foundation and they had to do all these foundation repairs and they had clay soils and stuff. And they had these huge bids to do this work. And I was out there and I was looking at it and I started thinking, and this is before AI came out. I wish AI was out. It would be a lot easier now. But when I started researching it, these expansive soils often are caused by poor drainage. So I talked to the engineer and I said, well, what if I just fix the drainage system and we put crack meters on the building? For the audience, crack meters are little devices that have it's like a ruler and it can measure if the building's continuing to move or not. And a lot of times when you have foundation or settlement, you put these crack meters on. And it's an improved way to determine if you still have settlement. So we went in and put PVC piping into all the downspouts, pulled the water all away from the area. We also did proper drainage sloping, and we cleaned out all the storm drains. They had tons of dirt and debris in them. And there was no more movement. So we were able to save almost $1.2 million of renovation dollars by not having to do something that everybody was certain we had to do. And I just simply said, well, why? Let's look at this. Let's ask questions. And talking to the engineer, he said, yeah, you're right. If you can fix the soil issue and it just doesn't get wet, we don't have this expansion stuff, you may not need it. So we did it and it worked.
Incredible. Let's talk about the 5 Ps.
Okay.
You wrote the 5 Ps of property management. I love frameworks when they're built from the field, not just from theory. You've already walked us through the 5 Ps at a high level. So tell me, Ken, which P tends to break first when property starts to go sideways?
It's always the people. It's always the people.
Always
Now,
the people.
I will say this. Sometimes the property doesn't have enough cash and there's no fault of the people. You could have an incredible team, but if the property has too much leverage, it had a floating rate and the interest rate just spiked and now they're squeezing every nickel out of it. And you know the death spiral on a property that happens when they start cannibalizing units, they start moving appliances out, they start doing those things. When you see it and you know it, and also it demoralizes the team. The maintenance team doesn't want to do that. It creates more work for them. They got to go back and fix what they pulled out of the other property. And you see this again and again. But I will tell you this, 9 times out of 10, when I show up on a property, if I have the wrong team, it's going to be impossible to turn it around. And the team is underestimated. The impact of the maintenance, they're the unsung heroes. The supervisor, they're so critical. And then having the right incentive and the right training. I think training is just lip service to most companies. So here's what I always say to people. How many times do you listen to their phone calls, leasing calls? Do you actually go and take a tour with them? Have you actually heard them make the pitch? So I was just listening to the phone call. We had a new CA. And I was listening to the phone call last week and we leased by the bedroom and someone called up and said, oh, I want a 2-bedroom. My husband and I just want to lease a 2-bedroom. She goes, oh, well, we only lease by the bed. And I looked at the regional and I said, what are you talking about? They can lease the whole unit. Are you crazy? But that's the stuff that's happening that you don't know. Management gap I talked about earlier. So you see that and you think training's happened. And here's one thing I've always said about communication. The only thing certain about communication is the illusion that it's taken place. It's amazing. You won't see it. Yep.
Incredible. Give me one example of how you diagnose people problems versus process problems.
Okay. So here's what I would say about the difference between a people problem or a process problem. If they've been fully trained, they have the right incentives and they're the right person for the job, then we start breaking down the process. So the process, you have to say to yourself, let's take I like to do concrete examples because I think it resonates more with the audience and me as well when I'm thinking about it. Let's take unit turns. So let's say we have an issue with the unit turns. So the first question you have to ask yourself, well, is something wrong with the maintenance supervisor? Is it the painter? Is it the cleaner? Where in the process is it breaking down? Or is the manager expecting them to punch a unit and they're unrealistic with the time frames? I've seen that a lot, where they pull the maintenance guy in 20 different ways and he doesn't have time to actually do the work, but they're expecting all this and to get these units punched, but he doesn't have the resources or the hours to do it. And I see maintenance guys running around on their phone. Next thing you know, they're called, they're going to another unit and they're getting pulled here, getting pulled there. And yet they still expect them at the end of the day to get this unit done and they don't want any overtime. So you could see that's a broken process. So we start with unrealistic expectations. So someone thought they could do X, Y, and Z, but they're not monitoring exactly how many times they're pulling them, what they're doing, what their process is. So the process needs to be documented. It needs to be workflowed where you break it out. Say, well, how do you assign work orders? How do you prioritize work orders? Are you allocating time on an actual calendar saying we're going to give them 3 hours to do this unit turn? We know it costs this much time on average. But you look at the math, you say we need 5 turns and you only have 1 day to do it. There's no math. They couldn't do it. So that's a broken process. So I always tell people, dig down into the details, take a pen and paper and say, okay, where are the problems? Where is it showing itself? How do we measure it? What are the KPIs? And then just start tearing it apart and looking at it.
Amazing. So which P is the fastest win and which P is the slowest grind that builds long-term stability?
The fastest P is people. If you get the right person and you leverage it with the right incentives, here's a great example of this. We had a property where we needed Google reviews. And I kept telling the team, we need to get more Google reviews. So I set up an incentive, $500 reward, whoever had 10 or more positive Google reviews, 4-star or more. They had like 45 reviews in a month. Before they had 2. So again, incentives. The one that compounds the best is process. And most people don't spend enough time. And that's where, like a company like yourself, if you can come into a process and automate the process and eliminate duplication, eliminate stupid steps, also eliminate headaches, because most AI that I've seen now, okay, this is the way I look at it. You can either reduce cost. Very few AI companies do that. You can drive revenue. There's a few. And then this is most of them. They remove a headache. They make it less painful. So most of them are in the less painful. It's kind of like I need an aspirin, so to speak. So a real revenue generator would be, hey, it's going to call back these leads and it's going to actually close the lease, or it's going to look through your rent roll and say, hey, did you realize that you didn't charge this person this month and that would have cost you $500 because you didn't charge them properly, or we didn't apply late fees correctly, or something like that. So there's some sort of automation process that you could build into your system to say, so that's a process that we could really compound. And the best companies in the world, I think they have these incredible operational benchmarks. They have these incredible cultures they built, and they use great processes to do it. Got to have great people, but to get great people, you need a great process. It's a chicken and the egg. So what comes first, right? So I think it's a process of doing both. When you get an owner that's really hands-on, that's really in the trenches, not micromanaging, because I still have to let people do the work, but they have to know that I care and that I'm following up. Most people think follow-up is just abdication, where you basically say, hey, did you do it? Yeah, I did it. Okay. When you just walk away, you don't ever check. But if you go back and check, I was looking at the financials today on one of my properties, and I noticed that the vacant electrics were very high. I said, okay, I'm going to walk, I don't know, ten vacant electrics on this property, and I'm not going to tell you which ones, but I better not see utility, the utilities way up and all these lights on, guys. So that's the kind of stuff now they don't know. So now they got to walk all of them and make sure they're right before I go. They don't know which ones I'm going to pick. So that's how you properly inspect to make sure, and you set the expectation.
Love that, Ken. You talked a little about culture. Let's go into culture now. You've overseen huge unit counts and you've seen teams succeed and fail. So, what have you learned about hiring, training, and leadership that directly impacts property performance?
Each one of those could be a separate hour-long
They
discussion.
can
Yeah. Yeah. So I would say this, and the larger the company, the more politics come into play. And if you're the leader, the more you have to have direct lines of communication with the people that are actually doing the work, because they call it the Persian messenger syndrome. So no one wants to bring you bad news to tell you that this is screwed up or that, because they don't want to disappoint you, or they don't want to look bad, or they don't want to get blamed. And I think that's another huge thing that you can do as an owner. Don't worry about fixing the blame, worry about fixing the problem. The actual blame part will come because here's the question. Were they not trained properly? Did they just miss it because they're human? See, I think a lot of people think that humans are robots, that they operate. If you have an A player, you're always an A player. But people have stresses in their lives. They go through divorces. They have sicknesses. They have illnesses. They have problems with their child, whatever it might be. And their performance is not going to be this straight line. It's going to variate. So you have to understand that. And I think you have to also realize that we're all human. And that you have to step back and say, okay, is this realistic? Is this expectation? Am I being realistic with my expectation? And the other thing I've noticed too is you can't assume people are going to be the same as you. When I was younger, I didn't understand why people didn't want to work. I used to show up, hey, I can't believe we get paid to do this stuff. This is incredible. And they would look at me like, are you crazy? So I think, but from my perspective, I'm like, yeah, this is fun. I get to go around and look at issues and help people turn things. It's fun. But a lot of people look at it and they're like, this is just another day at the job. So I think in order to make the culture right, it starts with the leadership at the top. Rot starts at the top. You've heard that saying, and it's so true. You can walk into an office and you can feel it. People walking on eggshells. People aren't willing to open up and tell you what's wrong. Like most owners don't, hey, what's the stupidest thing we make you do? What dumb things have I done lately? Because, by the way, I think I did this. I think it was screwed up. You got to open it up and let them know that you think you did something wrong, because otherwise they're thinking, well, and then he's going to turn around and come back at me. So, but you have to be open to being wrong. And most of us, it's human nature. We don't want to be wrong. And I've been wrong so many times in my life now at this stage, I just realized, well, I'm probably wrong about this. So let's figure it out. Let's figure it out and dig into it and try to understand.
What are some of the culture killers in property management organizations?
Improper incentives. You've heard me talk about incentives over and over again. I've seen programs where people set up incentives that the individual is just rewarded and not the team. And when you do that, people start trying to stab each other in the back to get that bonus or to get that advancement or whatever it might be. So when you don't make the incentive structure for the team, the benefit of the team, then it will cause real panic. The other thing I've seen, obviously, this has to do with the leadership structure you have, where you don't develop and train your people. So if you don't take the number two that you know is going to be your replacement, you should always be trying to train your replacement, saying, hey, this person, I'm going to get them set up so they can get up to the next level. But people don't want to do that because then they can fire me. But see, that's the wrong perspective to be thinking about this. You should be thinking, hey, I'm going to go to the next level and I need to train these people so they know. So I used to do cross training. So I'll give you a great example of this. I had a bunch of properties in Texas, and my regional quit. And at the time, I had 7 regional property managers reporting to me. And I said, you know what? I'm looking for a regional, and it's taking me time to do this. So I had an HR department looking for him. I said, what? I'm going to take over for this next 90 days until we find the right person. I'm going to take over the regional managership, and I'm going to kick your asses. And they all looked at me like, what? So we had all these different programs. So I went to all 3 of their managers. It was just 3 properties. And I said, okay, one of them was really good at collections. I said, okay, you're going to be my collection warrior. You're going to help me manage the collections on all 3 of the other ones. And she's like, yeah, and you're going to get extra money, because I was taking the bonus numbers from the regional, that salary that I wasn't paying. I was going to, And then I went to the one, she was really good with administrative stuff, and she was great at the audit. And I had her audit the other ones. And one of them was really great at marketing. So I split the regional role into 3 of them. And I'll have you know, we crushed them. It wasn't even close, because they were that motivated. So it shows you there's so much more potential to get out of individuals if the proper incentives are there and the expectations are there. And it was a growth opportunity. They looked at it, I get to work with the owner. They're like really excited, and they were really pumped up about it. And for me, it was just a test. I was curious, can they actually do it? Can they actually handle this and still not let their property perform? Now, long term, probably wouldn't work. But short term, it was. So in fairness to the regionals out there, I'm not suggesting you're not needed. You are. But I'm simply saying that was able to beat them in a short period of time. How about that?
Love it. Incentives are the key. Let's talk a little bit about systems data and where you think tech is. So this is the AI Edge podcast.
Hmm.
And the way that you write about AI and business thinking is very grounded. So, where do you think technology, data, even AI can actually improve decision making in multifamily where it is mostly just noise?
Okay, so it's interesting that you say this because I sat down and wrote some notes here. So let me just look over here at my notes here. So I like to put the investor hat on and the operating hat on. So I believe that this actually ties into both. I think that operationally, I think we're going to see a digital employee in the future. And this digital employee is going to be above and beyond an actual workflow. Like, I'll give you an example. Let's take the leasing agent. So right now we have a lot of leasing on some of these things, and they can answer telephone calls. And there are products like 11 Labs and some of those that do great with the voices and stuff like that. Eventually, we're going to have a leasing agent that is digital, and her role will, or his or her, will be to call these individuals to actually nurture them all the way through from start to finish. And they should be able to, if I were to test them against a true leasing person, do everything digital that can be done compared to a human, and they should outperform the human. And by the way, with no clawbacks, no issues. They can't violate fair housing. I don't think a lot of people realize, but you sign disclaimers. And when something goes wrong with your AI, it hallucinates something that the AI company that created it is not on the hook. The owner is. And I don't think a lot of people read the fine print to realize that's the case. So a lot of these AI bots and AI issues, and by the way, I understand why, because if you're an AI company and your AI bot goes haywire, you could put yourself out of business and put yourself in a lot of harm from a litigation standpoint. So I think everybody needs to read the fine print legally, because this legal liability of what can happen with AI automations is critical. Because when you're delegating out to an AI automation, and anybody that's used AI would realize that it makes a lot of mistakes still. Gotten a lot better, but even a few mistakes could cause a lot of problems, especially with fair housing related things or other. Maybe it gives them the wrong rent. What do you do then? I rented it for $1. So you never know. So those are the kind of things that I see. But I do believe that we're going to get to the point where we have digital employees that are not only able to reduce our payroll on site, but also drive our revenue. Now, I believe that low-hanging fruit for this would be an AI auditor slash trainer. Now, this is one of the areas, and when I was at the large company, I had these auditor slash trainers, and it's such a critical role, and most companies don't have it. Most companies give the regional manager the responsibility to do a desktop audit where they go and monitor did they do the stuff they were supposed to do? Well, the issue I have with that is that's like the fox guarding the hen house, so to speak. How do you know they're actually doing it correctly? How do you know they're actually objectively doing it correctly? An AI could be trained to literally go in and say, you did not set this rental person in correctly. Their lease rent is wrong. So therefore, we're going to miss every month. We're going to miss this. By the way, you missed the setup charge you're supposed to do. You missed this, and this, and it comes back, pops and says, hey, before you can process this, you made these mistakes. Real time. Not after the fact, 35, 45 days later, or 60 when I'm auditing the rent roll. So that AI auditor slash trainer would then train somebody. So here's a big problem I see with AI in general. First off, we're all tired of so many different logins and stuff like that. It drives people crazy. I mean, another AI to log into. So I believe that we're going to see the death of SaaS. So you've seen this. So now Gemini Pro that just came out has its own app built into it. So imagine, okay, I'll give you a practical example. I'm always going back to my practical example. HappyCo inspections. Okay, you can pay, I think it's $12 a unit per year to have the inspection on your property. I think in some cases it's a little bit more depending on how many units you have or what your deal is with them. All right, you can now build that app for a fraction and run it on your site. You can take screenshots of HappyCo and make it literally build an app for you to do your property inspection. I know, because I've done it. And I'm no genius with AI. So my point to you is eventually we'll be able to take AI on all our software. Now, here's something, we didn't talk about this, but the runaway expenses was one of the things I was talking about, major challenges. So in the GA expense, I was actually looking at this. I was looking at a deal that I underwrote in 2019, and I was comparing it to my G&A expense now. And the G&A cost is up over 100%, 100% improved cost increase over less than 5 years. So that's a tremendous increase on that line item. Now, why is it up so much? Well, you had software costs have gone through the roof. You have all these AI apps, all these things that are being added to the G&A cost line item that the owners are paying for. And it's a big cost. So my question would be like, look at Yardi costs and Entrata costs. I'm paying like $36,000 a year just for Entrata. So if I could automate Entrata, take screenshots of everything that Entrata does, the entire process, and create my own custom function and set up my own database and have the AI, by the way, the digital AI employee be the AI auditor, making sure it's controlled and everything else, I could theoretically eliminate that 36,000 a year on every one of my properties. Now, there's some costs. So maybe say it's 5,000 a year of some minimal cost per property instead of that to the server, the API and all that. So I see a future where not everybody, obviously, but eventually you'll get to the point where you have these digital employees that are constantly working for you that will dramatically reduce your payroll cost, which is huge. You'll also be able to reduce your software cost, which is huge, and break that down. And then when we tie this over to the investor hat, well, the cool thing about that is the AI can be looking at all deals that come through. It can underwrite them instantly. It knows your parameters. It knows exactly. So the underwriting process, the time to get the data, to analyze the data, to go through your entire checklist approach and pull down all the comps, understand it, pulls up Google Maps, does all this stuff that we normally do. And here's the key. The input has to be voice and text, not text only. And when you can do that, now you have a complete AI employee. And imagine the future where my AI underwriter is taking all the deals that come through. It knows it's signed up for every single broker deal out there. It pulls them all in. It knows my bucket list. It spits it out. And it says, hey, Ken, these 5 deals meet your parameter. Let's look at them. I pull them up. I start talking to it like I'm talking to you right now and say, hey, you need to adjust the taxes. I've already done that. Here's what I've discovered. Blah, blah, blah. Boom. Hey, I've looked at this. Well, what about this comp over here? That doesn't look like the right comp. No, that's the right comp. So having the conversations back and forth with the AI like I do with a real person, that's coming. And it may be here next year. Now, I've looked at a lot of different AI underwriting companies, and I've yet to find one that has it perfectly fit. And the problem is, in order to do AI underwriting correctly, you have to break it down into chunks. And you also have to feed in a lot of context, because I think in the future, context is going to be king. And the more context you give the AI, the better it gets. So I'll give you some practical examples of how I use AI. I had a partner of mine called up and said, hey, Ken, we need a K1 pro forma projection for this year coming up. And I was like, wow. So normally I'd have to get the balance sheet, get the T12, get all the closing statements, get all this information down. Then I have to go look up and make sure I don't remember the exact tax code and all this stuff. So I simply I had a folder with all this data was in there already. And I simply went into the folder. I have a prompt skill that I've coded in Claude. I talk to it on my whisper flow, which anybody that in the audience needs to know that I can talk 100, and I'm talking fast now, but I can talk 170 words per minute into my whisper flow. I can type 40. So I'm superhuman now with this whisper flow, and it's a great AI app. So the audience needs to know about that. You probably should link it down in the show notes. But whisper flow is how I input now with my cell phone. Everything I deal with, I do with whisper flow. All right. I gave it a prompt, just like you and me talking. And then I put it into my Claude prompt skill, and it made a 100x better prompt. I then took that prompt, dumped it into Claude, and said, hey, do this for me. And it spit it out. I had to go back 2 or 3 times, in fairness, because it made a few mistakes. But I had this beautiful spreadsheet with everything done. And it would have taken me several hours to put that together. And it did for me in less than 10 minutes. That is the future of AI. And I see it. Eventually, I'll be able to talk to it like I'm talking to you. And I can see this in like myself. I see every day, every time it comes out, I test it and I say, well, how much further can I push this? What else can I find? But then I have stuff that happened to me on Saturday morning. I was talking to the AI and I said, okay, I just went through this financial review and I had typed all my notes in the spreadsheet. I said, you know what? Normally I have to type these notes into email and send it to the regional and say, hey, what about this? I said, I'm going to use AI because I'm AI Ken. So I took it and I uploaded it, and ChatGPT said, I can't read the file. And I said, yeah, you can. I just see it. And it said, no, I can't read the file. So I said, okay, let me change my prompt. I changed my prompt. I kept doing it back and forth. Finally, I said, look, just look at column A and look at column L. Pick everything in column L out and then match it to everything in column A where it's at. That's your data. I said, oh, great. I understand. So I did the email. I said, this is great. This is awesome. So finally I got it to work. Then I took the balance sheet, dumped it in there, and it said, I can't do that. I was like, what are you talking about? So then I showed it the example of what it had just done. It said, no, I still can't do that. And I was banging my head against the wall.
Really?
So I want the users to know that these nuances of when you even if you have an incredible prompt, and this was an elaborate prompt, and if you break it down, the AI is not consistent yet. And that was the new 5.2, by the way, that I was trying it out on. So anyway, that's some examples. I can spend, I love AI. I'm an AI fanatic and I use it all the time. So I must have, I don't know, 50, 60 different custom GPTs and Claudes and projects and who knows how many N8N workflows and stuff like that I have.
That's amazing.
Yeah.
AI Ken.
Yes. Well, it's funny. I was on the call the other day, and they were we were trying to listen to some leasing calls, and there was a Zoom meeting, and both people were trying to figure out how to. They couldn't play the speaker, and they were sitting there. And we were sitting like 5 minutes, and I just pulled up my phone and I went to ChatGPT and I said, explained to it what it was, and it told me exactly what to do in 2 seconds. So like, how do you know all this? I said, I didn't. AI did it. I said, just use AI.
You got to. Are we there yet? No?
No. No,
No?
no, definitely not. There's a lot of cool things that are coming, but it's definitely for anybody that's worked with it and you go into the weeds, it's so inconsistent and it definitely still hallucinates. Now, I love it. Don't get me wrong. I'm going to be, every time it comes out, the newest thing, I'll be trying it out, trying to test it or whatever it is. But it is very frustrating to try to get consistency out of these platforms yet. Now, if you're doing a very narrow range, like I'm extracting this, or but Nano Banana 3 is nuts. I love it. I mean, the stuff you can create now, it doesn't misspell words. You can tell it to make sure you double check when you're doing it. And I've created some incredible infographics. Google Notebook LM is your best tool for learning anything. I actually set up a learning testing thing inside of Google Notebook LM for the leasing team. And I loaded everything in there and it can create all these incredible images. And I was showing them how you can create the videos using Google Flow and all this kind of stuff. So it's really cool. Now, the other product that I use a lot is GenSpark. Are you familiar with GenSpark? Yeah. So I love the AI designer in GenSpark. So one of the things I do for fun is I'll look for ads in a magazine. And I'll say, how can I make this ad better? And I'll take it. And this is one of my main guys here. I love this guy, Alex Ramosi. So I'll take it and I'll break it apart and try to make it better. So it's kind of a mental challenge. Well, now I don't have to just handwrite it. I can actually make the ad, which is crazy. So before, it was more handwriting and marking stuff up. Now I can literally remake the ad in a few minutes.
Absolutely incredible. AI
Mhm.
can. Let's talk about rent optimization and revenue management reality checks. Can AI do it?
Okay, it's funny. I actually built a rent optimization software. I hired a programmer and a coder because this is years ago, and they wanted like 1.5 million to put it at my. I had a lot of properties at the time, but it was a tremendous amount of money. So I hired a coder, and I think I ended up doing it for less than $75,000. And I rebuilt it. Now mine wasn't as sophisticated as theirs. I'm not going to say, but he was a guy who worked on the delta pricing optimization. So it was a really smart rocket scientist guy. And I just simply sat down and said, okay, let's bracket this. Let's make it simple. Let's make it easy to use at the site level. So I went through the whole process. So when I look at the rent optimization software that we have, obviously there's a lot of the black box. We don't know exactly how it's calculating what, because you can mess around with the different variables. So our variables were based off of your leasing velocity, your current occupancy by the floor plan, where your comps were. So I created a grid box to say, okay, here's the top of the market, here's the bottom of the market, where are we at in that market? I never wanted to push over the top unless I was the industry leader in that particular market. So then that allowed me it was a guardrail to say, hey, don't push your rents over the top because we're not competitive. We don't have the same amenities. We're 2.1 and they're 2.2, for example. Well, I don't want to be pushing to the 2.2 prices. So it put a cap on where the pricing could be. And then you had things like the lease term, like if they do longer out, you give them a less price if they do a longer lease, and those types of things. So it had all this math built into it. It was fairly successful, but here's the problem I have with revenue management stuff. Separating the market returns from the actual data returns. Now, I'm not going to sit here and suggest that the revenue management doesn't work. I think it does. The issue I have is how much of it came from the general market versus how much of it came from the actual, you just don't know. No two deals are exactly alike. And you may run in on one property across the street and the other property, but the other property doesn't have the exact same floor plans, the exact same unit mix. By the way, doesn't have the exact same team. They're different people. If I have a really great leasing agent here and I have a sucky leasing over here, well, who's going to win. So there's so many different nuances that come into it. But do I think on average, optimizational software will be built into the models? The question is how you obtain the data. Right now, it's just going to be scraped from your competitors. But remember, as I talked about the one property, if we're doing look to leases, we may not know that those leases are happening. So therefore, we won't know what's going on. So you still have to be able to read the market and say, wait a minute, we had X number of, I always like to look at the number of leads that come in and the closing ratios. And then I like to look at obviously the renewal ratios and other ratios. But if I see that lead count, and wait a minute, why is it dropping so much? What's happening here? Then it starts explaining to me, wait a minute, something's going on in the marketplace. Either it's the holiday, but then I'm looking at the past trends. Well, it didn't happen last year. So what's going on? Why? Is something wrong with our ads, our marketing? Did we not turn on the Google AdWords properly? Are we not optimized? Did we get a bad review? Stuff like that. So there's a lot of nuances associated with that. But I do think that revenue management eventually will just be standard built into all the software platforms. And it'll just be the issue they're going to have is it'll scrape the data. It'll pull it up. The question is, will you eventually be sued because you're now, are they going to say it's unfair advantage because you're pulling it? But in order for them to do that, they got to go after the airlines and everybody else. But housing is so much more politically motivated because people want rent control. People want rent holidays, and they think the landlords are greedy landlords, and they don't understand that our operating costs go way up, and we didn't get a holiday. We don't get a mortgage holiday or a property tax holiday or a payroll holiday. Yeah.
That's excellent. Let's go through a couple more. Work order triage and maintenance planning.
Okay. There's a lot of companies that do that now, and there's a lot of AI companies. I definitely think that a lot of the problems we're going to have with a lot of these is that I was talking earlier about how you can basically automate your own workflow. So what's going to happen is someone like Entrada or Yardi is going to say, hey, we can allow our customers to build workflows on top of and inside of our product, and we get to control them and capture them. So if I'm Yardi or Entrada, I'm going to say, oh, yeah, we'll let you build whatever you want, but we're going to capture you. That way you have to use our base model. So the first person, they're going to realize that, and they're going to make it so easy, so much easier. Like anyone who's done an N8N knows about beating your head against the wall, trying to get verifications, get your Google set up, get your access. And I mean, it's mind numbing sometimes, but I could definitely see a situation where Google, Entrada or Yardi basically builds this platform to make it very easy for them to, hey, you want to, I'll give you an example of this. There's a great company, what's it called? AppWorks. Their entire business could be replicated by one of those other companies, and they could build it inside the model. The issue is that, and competition is fierce. Same thing with inspections. And I see a lot of different competition out there, and I wonder how this is all going to play out. But when it comes back to answering your fundamental question about the triage and how I would go about attacking that, well, this is an interesting story here. So I remember back in the 90s when the Palm pallets first came out, late 90s, and there was a guy, a really sharp operator. He was going to have all his maintenance guys log how much time it took him to do an HVAC, a hot water tank, and all that. So he had this data on each one of his properties, and it would create like a digital fingerprint of what the maintenance profile should be on this property. So then if a maintenance guy left, a new maintenance guy came in, and he saw these big deviations on the standard mean, he would know, wait a minute, this guy's not performing. And I said, wow, that's an incredible idea. Eventually we'll get that with AI would allow us to know, because I think there's a tremendous waste in terms of skill set. First off, are they properly trained? One of the easiest things in the world for people to do is just call the vendors, especially if they have approval to do so. Now, that could be a training issue. Absolutely. It could be a resource issue. They've got too many work orders that came in and they have to get otherwise the residents upset. Totally get that. It could also be a combination thereof. It could also be they have the wrong person. Those are all possibilities. But if you had the AI to know that, hey, it should take 2 hours to do this hot water change out, and they have to, replace it or whatever it is, and it's taking them 5, why? And it starts showing these exceptions. And then I also see that the triage part, a lot of times when they're pulling it out, they want to do the easiest work orders, because if you're tracking the number of open work orders, you're saying, hey, the less work orders we have, the better, but you may have these work orders that are simmering. So I think it's a combination of the number of work orders we have, but also the severity of the work orders. So if I got a light bulb out and a towel bar missing, but I have a backed up sink and I have an AC that's not working and it's 100 degrees, well, the priority is pretty simple, AC and sink. The other ones can wait. And I think that's that whole triage process and making sure, but it also has to do with the measurement tool that you're using to manage and measure your team. So if you're just simply looking at the stats and not understanding the details and the context, back to that context word I was talking about, well, I think, what do they call us now? Context engineers instead of prompt engineers. We're context engineers. You know what I think is interesting about that? I think that context engineering and prompt engineering is also good for people, because it forces us to think through properly before we ask for a request or an
All right.
issue.
That's fantastic. Love that. How about collections, workflows, and delinquencies?
Unfortunately, I have a lot more experience with collections and delinquencies than I like to admit. I think the biggest thing I've seen with that are two things. One, you're approving the wrong people. You're letting in the wrong people. Your leasing standards are not high enough or something like that. So you're letting in the wrong people. Two, you're not being consistent with your collection process. And I've seen this again and again. People are, oh, well, Mrs. Smith, she'll get paid next month and I'll get her caught back up. No. And I learned this the hard way. When I was a property manager on my very first property, it was 24 units. This is many years ago. I had a lady and she came to me, her husband was beating her, and it was all these terrible woe unto me stories. So I didn't file an eviction on her. And I told the owner, he's, oh, okay, all right. And then she didn't pay. And she made a bunch of excuses, so I had to file on her. So I filed on her, and then I went to court, and then she sat there and made up all these lies and all these terrible things about me. And I thought, well, the heck with you. And never again. This is business. I'm never going to do this again. So I just said, look, it's not my money. It's somebody else's money, and you have to file. It's not don't blame me. It's the corporate. I always tell the managers, don't make it personal. Some collections, they get so hostile towards the individual. There's no need for that. Keep it professional. But I do think you got to have really good standards. Make sure you've got proper guarantors. Make sure they have proper income. Make sure nowadays with the fraudulent AI, you can manufacture W-2s and all that. You have to really dig in and understand. And then the collections. This is a training issue, and this is a personality issue. Do not get a salesperson to be your collector. They terrible at it. They love people too much. You got to have the right personality to be a collector. And by the way, My personal preference is not to buy properties that have high bad debt to begin with. So that's your class A and class B pluses. But I have unfortunately owned properties with 8, 9% bad debt. And it is the one I was telling you about before. And you just have to evict a lot of people.
Can AI do that? Can it do collections, workflows, and delinquencies?
Well, I think that there are parts of it can do. I know that it could obviously send an email, it could text them, it could call them, it could do all three of those things. It can't walk and put a notice on the door. It can't walk the door to see if they're actually there yet. Maybe you could put a drone and have a drone do it or something in the future. I think that AI could file the evictions. So there are lots of pieces it could do. It could actually do the reporting on it and stuff like that and let you know in its context back and forth who it spoke to. It could transcribe it and put all the notes in there. I do think it could maintain it. So I do believe that's why that's an easy area for AI to automate. But you also have to make sure that your collection bot understands the actual there's a lot of laws that you can get in trouble with when you're collecting, and you need to make sure that you're not breaking any laws because the landlord's on the hook for those. Understanding I think it's the exceptions for all these that are going to be the issue. The standard stuff, hey, you owe your rent, and here's the late fee, and here's when it's due, and we're going to file an eviction. That stuff's known. It's the nuanced stuff, and that's when it starts going haywire. Well, I want to make a partial payment. Well, we don't accept partial payments. So what if they try to send a partial amount in? Does the AI know to, hey, spit that back? And if not, it may just take the money in. And now in some states, you've invalidated the eviction. So it's those nuances and understanding. And that's where the workflow and the engineer and making sure you've broken down the process in enough detail to really understand it.
Amazing, Ken. How about the next one?
Mhm.
Inspection systems and operational audits. AI do it?
Okay, so I think that anything inside the computer, BI is great at. I could see a future where we have the mega band glasses and we're able to walk the unit and it automatically records it. And then I walk back out and it's uploaded to the web. It then takes the entire image and makes a complete punch list for the maintenance guy, and it also schedules the turnkeys and all that. And it's all done. And when we walk back through, you do the same thing again. Now, I also thought about a micro drone, and I've actually used drones on my properties where you put them above and you look at the stuff like that. I think and by the way, this is being done right now on commercial construction sites. They have the drone technology that flies and shows you the progress and then it pulls back. But now okay, this is a great example. I needed a bus stop built at one of my properties. So I found a couple of images of cool bus stops and I took a picture of it and I loaded it in ChatGPT. I created a super prompt and I was blown away. It gave me a step-by-step work for the contractor, everything. It even asked me about the proper angle for the snow. It asked me about the curb for the handicap, all the details. It was insane. How great it was.
Amazing, amazing. Last one, predictive thinking for CapEx and staffing needs.
Well, obviously, AI has the ability to look at past historical patterns and make predictions. So I think the issue you're going to have with a lot of like maintenance stuff, unless you have a really good way of documenting where you're at, so it has a starting base, and then it needs a good data set to learn from. So the question I have, I always like to come down to the example. Let's take HVAC. So this is how you can really tell whether or not it has legs. Okay, let's say imagine you have a 100-unit apartment complex, and let's say it's built in 2000. Okay, at this point, it's 25 years old, a lot of the ACs. Well, some of them have been replaced, some of them are about to die, and where are they at? Well, what kind of product does it have? You have to know each unit, how long it's been there, what's its service record, how often has it been served, what's its freon, how many work orders did it have? Think about all the nuance. It needs all that data to know how to properly predict. If it doesn't have that data, now, after it has all that data, then you have to have a training set to say, okay, based on this training set of data, and by the way, you also have to have the temperatures because now you have to say, okay, well, the temperatures, was it a cold? Was it unusually cold? Was it hot? What was going on? And you have to have all that stuff built into the model. And also, here's what else you have to figure out. The usage. What if some resident hardly ever turns it on and someone else has it on 60 degrees? So do you see all the nuance when we talk about prediction, how much more difficult it would be when you start unpacking it? And the data would need all that to be able to predict that. Now, what you could do is predict ranges. I'm not really sure how useful that could be. Now, I've heard people talk about the Internet of Things and putting small devices inside all the areas. And then you could see water pouring and water leaking and all that stuff. I can see that, but here's the issue I see with all this stuff. It's just like the locks you put on the doors. They work great for a couple of years, and then they're ancient. By the time you go 5 years later, they're ancient, and you need to upgrade them. And then they're $450 a unit. Very expensive cost to put these things in there. And you do it again, and in another 5 years, you got to do it. So you're creating this, whereas you put a regular door lock in there, well, who knows how long that might last? 10 years, 15 years, who knows? So I think it's an interesting thing, but I do believe that predictive AI would work. I also think that AI could be incredible at auditing and looking for theft and fraud. It could be incredible at maintenance, shop inventory, all sorts of incredible use cases you could do with AI that would just blow people away. But I think the key is going to be getting the hallucinations down, really going back to those three things I talked about. You can either drive revenue, reduce operating cost, or you can remove a headache. I think 90+% of them right now just remove a headache. It's kind of pain in the ass, but it's not that bad.
In today's market, expenses are sticky, insurance is brutal, labor is tighter, debt is different. From your seat, what does disciplined operating look like right now?
I hear this a lot, and I think that a lot of people don't like the answer. And the answer is it's boring basics. We come back to the 5 Ps. Do you have the right person? Are they properly trained? Do you have the right incentives? All right. Do you have the right processes on the site? Are you inspecting properly? Do you have the right expectations, which by the way ties back to the people side? Do you have the right capital dollars allocated to the property to maintain the asset? You can have incredible people, incredible processes, but if you don't have enough capital to make your debt service, it doesn't matter how great your team is. You could be Michael Jordan, and that thing's going back to the lender. So I do think it's a nuanced thing, but I do think the basics are. I see it over and over again. We always are chasing the shiny AI this, AI that, and it's the basics. It's the team. It's the team. It's the incentives. It's the processes. And I'm not suggesting that AI won't revolutionize our society. I think it will. I don't know when, but I believe it is. And it's made an incredible impact on my life. I'm way more productive with AI than without it. It's incredible. Like I told you, that cash flow analysis, I said, well, it'll take me hours to do that. Did it in 10 minutes. That's the future. I see it. And I can touch it every now and then. And then, of course, I have the frustrating parts where I try to, have it do something simple, like just take my notes off of this spreadsheet, and put it together in an email. And I'm beating my head against a wall. So I think the users need to understand that's where we're at with AI. Incredible productivity improvement, and then there's a lot of frustration. And then eventually you need to bridge a gap where it's just all this incredible productivity gain and this digital employees, and it's able to talk to you and me, and it's able to do, well, it's PhD, it's way smarter than I'll ever be, but it has no context and it doesn't have any wisdom or judgment. And that's the thing that holds it back. It's not wise, and it won't be because it doesn't have the proper context. Now, eventually, yeah, could. Absolutely. Let's say you had an AI that was just mad thought experiment. We have this on our glasses. It's listening to us. It's got access to all our data, and it follows us for 3 years. It knows everything we've done, everything we've thought, every work thing we've done, and it's training and it's knowing. And then I say, okay, I've now created an AI Lewis, and I say, okay, here's a deal. And it knows you because it's watched you underwrite hundreds of deals. It's watched you. Think about what it could be.
Incredible.
That's where we're going.
That's where we're going.
Yeah.
That's amazing.
Yeah.
Absolutely amazing. A lot of people want it, a lot of people want tactics, but you clearly think more in principles. So what principles have served you through the cycles, and what does the next level of operating look like for you? Let's talk to operators.
Cycles and tactics. Well, I think that I always just keep coming back to the basics. In terms of tactics, let's be clear what you're talking about. So I always go back to my 5 Ps. So I have my frameworks that I use. So any problem, I suffer from what Charlie Munger says, a man with a hammer syndrome. So I have a hammer and I want to nail it on everything. But it's a very useful tool. And I believe what Bruce Lee said. Bruce Lee said that whatever you're dealing with, take what's useful, throw away what's not.
Mm-hmm.
So if you're looking at AI and you say, hey, it can do this, this, and this, and then someone else says, well, I don't like that, I don't like this, well, then don't use it. Use what works for you. Everybody's different. Everybody's personality is different. Some people don't like tech. Some people love tech. Some people think it hung the moon, but I think there needs to be a little bit of caution with tech too, because we love to chase the shiny objects. We're constantly looking, oh, this new thing's going to solve all my problems. When really, if you just sat down and rework the 5 Ps, where you got the right people, you got the right incentives, you got the right processes, and redo that. Not that AI couldn't make it better. It could, but I keep coming back to the fact for operators out there, if I went out to a problem property 9 out of 10 times, unless it's a market issue or a capital stack issue, which is something the sponsor screwed up. So it may not be their fault, the capital stack is, but the market may not be. Okay, I've been in plenty, like when the bad things happen, let's say we go into a 2008 kind of thing next year. Well, you could have bought the best deal in the world, but you may be struggling financially. And that's not your fault. It's just, that's the reality. That's the business we're in. But if you put a 90% loan on it with mezz and a 24-month turnaround period, and you had all these unrealistic expectations, well, that's your fault. So you can't put that onto the team. But stepping aside from that and just saying on the operational side, I would say the number one thing an owner should do is try to close that gap from what you think's happening and what's really happening. And the only way you do it doesn't mean you have to check everything. Just check enough where they don't know when you're not going to check. And here's one of the things you have to ask yourself. How many times do owners physically walk their properties? How many times do owners physically go out and take a tour with the people or listen to the calls or look at the ads or look at the website or even better, read the Google reviews? So if more owners did that, they would have a better understanding of what the property's doing, what the struggles are, and what the issues are. And you want to get tactical, well, it's in the details.
Ken, this has been fantastic. Let's land this plane, two quick ones. All right. What are you most focused on learning right now?
Huh. Well, it's interesting. One of the things before I got on the call with you, was copywriting and marketing.
Interesting.
So I'm a huge believer in marketing, and I've seen examples of how proper ads, can increase effectiveness on marketing 200 or 300%. So what most of us do is simply copy what everybody else is doing. It's called marketing incest. There's a guy named Dan Kennedy that talks about this. We just copy what everybody else does, and it's just good enough. And by the way, that's the way I thought until my eyes were open. And now I realize there's so much I don't understand about marketing, and I'm really on a quest to learn more about it and become a better marketer. So that's a critical thing, because I think in the age of AI, marketing and separating yourself from everybody else is going to be critical. And I think that's just a critical skill. The other thing I'm learning, and this is a big passion of mine, is AI. I'm constantly learning new automations, new ways to make things better, to improve. And then the other big passion of mine is mental models. I'm a huge fan of Charlie Munger, and I've actually built apps and quiz apps and things like that to actually quiz me and try to teach those mental models in my mind, so I can say, hey, yeah, I need to remember that. And then I actually have created custom chat PGs that actually go through and tear apart an article, tear apart my own arguments, and say, hey, you're suffering from this mental bias. You're suffering from this one.
That's awesome, AI, Ken.
Yeah. Yeah.
I love it. So, do you think copywriting is still an art, or still useful with AI now?
Oh, even more so.
Even more.
So what I've seen is that the AI can mimic certain things. It's funny. I had this conversation with a friend of mine. He's an award-winning artist and photographer, and he was blown away with some of the images I was doing in Midjourney. And I was like, imagine me now with Nano Banana. But so I was talking to him about it, and he was really against it. And I said, you shouldn't be that way. He goes, why? I said, well, here's why. I said, you see the world differently. You have an expertise level. Your vocabulary is different than mine. The way you describe how an image should look is totally different than an amateur. I'll never be able to have the vocabulary unless I learn what you know and do what you do. So when we're talking about AI, and by the way, this applies to everybody, there's a subject matter expert, and this expertise is going to become even more important in the AI age. I can immediately look at something that's, marketing related now, and I can see when AI just generated it. There's no real thought. There's no personality. There's no character. And there's a lot of that. And it's very easy to produce, and it costs you a lot of money when you're this. I call it the sea of sameness. Everybody's the same. And AI is great at creating a sea of sameness.
In the next 12 months, what are you trying to get better at?
Well, again, I'm really focused on copywriting, marketing, and the AI. Those are my big ones. And also learning more of Charlie Munger's mental models, and really understanding human psychology. I'm fascinated by behavioral finance and how that works. I probably read, 110 books a year. But what's interesting to me about reading the books, when I read a book, it's not the fact that I've read the book that's important to me. What's important to me is the ideas I get from the book. So if I can get one or two great ideas from a book, wow, that's incredible, that I actually use and change my behavior. Most of the time we read a book, nothing happens. Yeah, read a book, it was interesting. So there's educational books, and then there's books that are truly, that will impact you. Like this book here, $100 million Offers. This book here will change how you see your business. But you need to really dig into the details and understand what those details are and go in and figure out the stuff. But then there's other books that just really speak to you. Like I love this Patton book. This is a great book as well. I remember him talking about leadership. And what blew me away about this guy was how smart he was. He had tons of books, and he would sit there and study other commanders and figure out, he would say to himself, how did I do what they did? If I were in that battle, what would I do? And he would relive it in his mind. It's fascinating. So this is the kind of stuff that's out there that you can learn. It's really amazing.
Well, physical books.
Yes. Well, I'm primarily now Kindle. So if I really love a book, I'll get the physical and mark it up. But most of my books are Kindle or Audible.
I love
and I like
Audible.
to do both. I'll do Audible and I'll read the physical book as well. Do both of them.
Beautiful. I love Audible just because it's easy to listen to, or be able to drive around and get
Yep.
your PhD.
All right. So what I would tell all the listeners, if you use Audible or you use podcasts, I'm a big lover of podcasts. You take the transcripts, you dump them into Claude or ChatGPT, and have it break out all the core lessons and the stories, because that's what you remember. And what I hate about podcast or Audible is if I'm listening to something, I need to write that down. Where if I'm reading it, I can just highlight it and then come back to it or mark it. Now you can do the little clip thing, but it's just kind of a pain. It's
hard.
not. Yeah. So I think someone's also, by the way, Audible should actually have a thing where you talk to it, say, hey, I need you to separate this. record that, remember that, add that to my note for this. And it takes the section you're listening to and puts it in there. So it should be like an overlay, little listening to you. Hey, I need you to change this. You saw that they just now added to Kindle the AI on Kindle. So you can now pull stuff up. So I'm sure the same thing's coming to Audible as well.
Love Audible, but like you said, it's a little cumbersome when you have to do little clips or a little bit of notes or bookmarks or whatever you're using. How are you finding transcripts for Audible?
Well, so I actually have one of these guys right here, and then it actually is a Claude pen,
Yep,
AI pen,
yep.
and then I'll play it. And I can just have it recorded, and then I
Oh,
just transcribe it. Yeah,
that's fantastic.
yeah.
Excellent. Ken, this has been fantastic. So, of all of our listeners listening in that want to find you online, what's the best place to find you?
LinkedIn, LinkedIn. I'm on LinkedIn.
How do they find you on LinkedIn?
Just type in Ken Doble, Doble. I don't think there's any other Doble on there. Well, maybe there's an executive producer in Maine. I'm not associated with him. Yeah.
Fantastic. We'll drop that link in the tags and the show
Uh-huh.
notes for multifamily operators, investors, and asset managers to follow your work. Ken, thanks again for coming on and breaking down what actually drives performance in apartments from someone who lives every layer of the business, from on site management to finance to running operations in real scale and then rebuilding smarter after 2008. You brought a level of clarity that cuts through the unusual noise, and you tie together deal making, execution, incentives, and the human side of operations in a way that a real operator can. This has been the AI Edge podcast. If you got value from this episode, send it to another operator, GP, or allocator who's trying to separate what works from what sounds good and who wants to build a multifamily business that survives cycles, not just quarters. We'll see you on the next episode. Thank you, Ken.
Thank you. I appreciate it.